in the idea shown here. RSI was invented by Wells Wilder and first introduced to the public more than 30 years ago. Despite of this indicator is one of the more popular ones. RSI measures momentum by comparing the extent of a stock's recent gains and losses by transforming this information into a number between 0 and 100. Many traders confuse this indicator with the relative strength between two stocks. RSI has nothing to do with that, though the name implies it. RSI is formed by using the average gain and loss over a predetermined period. Wells Wilder recommend a period of 14. You see this setting here. This is probably the most used setting. But since the invention of RSI, we have been introduced to intraday trading, so we are seeing many different settings. Scalper might use a lower setting of 7. You have to figure out what your trading style is and then backtest the setting to see what's best. RSI is plotted between 0 and 100, where 70 is overbought level and 30 is oversold level. I've seen many traders preferring an overbought level at 80 and oversold level at 20. This is a personal preference. The higher you have your overbought level and the lower you have your oversold level, the fewer trades you will have. When RSI is underneath 50, it tells us that the recent average losses are bigger than the recent average gains. So the stock is in a short-term bearish environment. When RSI is above 50, it tells us that the recent average gains are bigger than the recent average loss. So the stock is in a short-term bullish environment. Probably the most used technique is a crossover of 50. When RSI climbs here and crosses through 50, that could be an entry signal. Or when it crossed down through 50, it could be a short signal. Another great use is the overbought and oversold levels. Traders will be looking for entering a short here at overbought or entering a long here at oversold. Over here you see RSI stays overbought and price keeps climbing, making new highs. So if you had put on a short entry here, you would have been stopped out. So it's important to use other indicators and or chart analysis before just entering using RSI. RSI divergence is the third way to use RSI. You can use it for both analysis and entries. I will show an entry on RSI divergence later. But first, here's the analysis. Here we see price makes higher highs, RSI makes lower highs. This tells us that the current trend can end sharply and soon. So when we see this, we want to tighten up our stop. So we look at our chart and we see that this MA has proven to be a good dynamic support. It's tested here and here. So we now place our trailing stop right here because of the RSI telling us that the trend can end sooner rather than later and sharply. Here's a setup using RSI crossing through 50 after reaching extreme levels as overbought or oversold. But first, let me emphasize one more time that it's very important that you use RSI in conjunction with other indicators and or chart analysis. And I will show you why. Here you see RSI overbought crossing down through 50, giving us a short signal. But look at price, it never drops and it keeps climbing. This happens again here, crossing down through 50, but looking at price, it never drops and stops you out. It happens again here, so that's 3 times in a row. So how can you avoid going short? Well, by going with the trend. But in order for me to get an oversold level, which is here, together with a trend still intact, I need to lower my settings in the RSI. I've done that to 7. So here's the setup. First, I identify the trend, I look at my MA and I see that it's upsloping. So I'm only gonna take long plays. I then look for my oversold levels. There's only one, it's happening here. And third, I look for a cross through 50 on a close basis. That's my entry. It's happening on this bar. If you see here, there's only one setup going long and many to go short. But I don't care about the quantity of trades. I care about the quality of the trade. Okay, here's a similar setup using RSI at overbought oversold level with a cross of 50, but I've also added divergence. Divergence happens when price makes a lower low while RSI makes a higher low. Before I start with the entry, I want to analyze the market. That's the first thing. I see that this uptrend here ends here because of the crossover of the MA. We're seeing a sell-off which then stalls. The MAs are flat and we're not seeing any lower lows and lower highs yet. So I'm considering this sideways market. And because I don't need an intact uptrend to trade this RSI signal, I'm using the default setting of 14. So second, I then look for my oversold or overbought levels. And third, because I've added divergence to this trade, I only have one signal here, and that's this signal. There's no divergence over here. And fourth, the cross of 50 happening here is my entry signal. This ends today's video. I hope you enjoyed it.